Testing, testing, 1, 2, 3. The wind in Spain falls mainly on the plains, the on some fruits stay mainly in your bones. Anybody here? Happy New Year, happy holidays. Huh? I know, quiet markets. I don't know if this YouTube thing is set up properly. This new setup is so weird. Is anybody here? I got one concurrent viewer and one like. That's a good start. I guess YouTube is sending out little pings. Make sure you grab the chat. We'll start when we got some people here. I guess while we wait, I'll double check the settings. Let's see. Yeah, it's weird because there's multiple pieces of software. Oh, Tate there. Let's see. Oh, I can't change because it won't even show me because I'm streaming. I guess we're here, right? Are you still here? I don't know if this is working. Well, people are typing in the chat, but down there it says no one's logged in. So anyways, yeah, I hope you had a wonderful Christmas too. I guess we got some people here. So I guess we'll do a webinar today, huh? What do you stink? Smell like a plan? Then let's go. Welcome to the Forex.Today YouTube channel. Let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Thank you for being here today. Happy holidays. I know you're probably doing something with family, but you're my family, so I'm here with you. Make sure you like and subscribe and leave comments on the videos. Would you please do the little thumbs up? What I plan on doing today is just burning through the charts, see how you're doing. If you have any questions, I'm here to answer those. I'd like to start by thanking tradersway.com for being our sponsor. Make sure you visit tradersway.com, download a demo account, play some testing trades. You'll find the execution speed is very fast. You'll see that the spreads are very, very competitive. If you don't like paying spreads, you can have an ECN account if you want. I don't really care. I prefer variable accounts. So that's the VAR. That means most of the time the spread's lower. If you like to scalp, especially high volatility event-driven strategies where spreads can widen, then maybe you want a fixed spread. Lots of choices. So thank you. It's your way at Trader's Way. So again, today we'll just burn through the charts, and if you have any burning questions, we'll get those addressed, and then we'll move on with our lives. So without further ado, let's go. What's up, laddie? Thank you very much. I'm doing great. Hope Santa Claus was nice to you this year. Anything better than coal is a surprise for me, so that's good. Hopefully you can see the charts all right. And I don't know, let's go. What am I staring at? Staring at the normal news setup? So let's go. Start here. Kiwi Swiss franc. From a bearish point of view, we're at the top of a channel, but still not in a bearish kind of trend. As you can see, up, 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 up. But a bear would want down, 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 down. So, yeah, maybe at the start of something, but nothing to get all excited about. So let's flip this around, and let's take a look at it from a bullish point of view. And bulls are actually quite happy up until now. where you have an up, 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 down, down, buy, up, 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 down, down, buy, up, 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 down, down, whoa, whoa, whoa. this big drop's a little scary, but it recovered. Okay. And then you can see right now we're not on today's buy zone, but we're on tomorrow's buy zone. So I don't know how you feel about that. Seems to me that's an out of position play and, you know, is reasonably aggressive. So whether you're a bull or a bear, today you're not really getting what you want. Now, this time of year that's fairly normal, right? So right as of yesterday, we sort of had a half day in the United States. Markets were closed in Asia, markets were closed in Europe and all that kind of stuff, and Americans did a half a day. And of course, with no inflation in the United States, full employment, and the Fed stimulating the economy, of course, you know, yesterday every single market I think hit all-time highs. And was it the NASDAQ that closed over 9,000 for the first time? Yeah, happens. So as far as seasonality, I guess we got to throw that out there. In the next week, when's New Year's? Hang on, I have to pull up my calendar. Yeah, but in the next 7 days, I would be not shocked at all. In fact, I'm planning on some profit taking happening. And isn't it nice to have every single market, stock market, for example, at all-time highs? Well, isn't that a great time to start taking profit? So, you know, whether it's today, tomorrow, next week, I don't know, don't really care, but I'm preparing for that. It's just a seasonality play. It's a little bit of a guess, of course. So, you know, you don't throw money down on a guess, but I'm ready, willing, and able if that shows up. Okay, so anyways, let's take a look here. I believe these are day trades. Let's zoom this out. Let's do weekly and monthly. Okay, and we can see, ooh, this is interesting, isn't it? Okay, so January's sell zone is right about here. We'll call it 44. Right now we're at 43.50. So wouldn't it be great to get another 50 pips to the upside and then a bajillion pips to the downside? Now, in years past, the monthly move occurred in like 2 days, not 3 weeks. So that's the profit taking, where every single person on the planet books some profit either at the end of the year or at the beginning of the year. And then boom, you get a big move. Doesn't mean the market's going to come down. I'm not saying, you know, it's going to be raining cats and dogs, whatever that means. Just some profit taking. Okay. Now in 2020, I would expect the stock markets to continue going up. So generally speaking, it's still risk on. But I'm just talking about some profit taking at the beginning of the year, and maybe the stock market drops by 5 or 10% quick. So I'm open-minded to that. So why would the stock market continue to go up next year if we're already at all-time highs and there's global risk and all that kind of stuff, right? Low inflation in the United States, well, really everywhere. Full employment, that's supposed to be jobs, right? And the Fed is accommodative, free money. Does that sound like that's good for the economy? Yeah, so I think the big news, if anything, let's say the stock market goes up another 10 to 15%. That's just a pure guess. But let's say the stock market goes up 10 or 15%. Well, that's not the 30% we saw in 2019. But you know what I think the news would be the steepening of the yield curve from something like this to maybe something like this. And that means the 30-year goes up a little more. Okay, why? People feel a little more comfortable about the future, and they start getting out of their long bonds and instead buy the stock market. Okay, now we have built-in caution, of course. Okay, we have built-in caution, and that's the election in November. So that's built-in breaks. As we get closer and closer to that, and we see more and more well, first of all, the Democrats are going to have to pick somebody, so that's going to be very interesting. You know, if Biden wins the pick, then that'll probably be good for the stock market. If the Democrats pick Elizabeth Warren, for example, ooh, that's going to be, concerning, right? Because it's not that I don't like or dislike Warren. It's just that her agenda is significantly different from the current agenda. So, like, if Biden wins, okay, it's again different, but Warren is more different. Does that make sense? The mic is low. It shouldn't be. Okay, I'll move this closer, but I'm looking at it. The mic is not low. Okay? Okay, cool. So those are the things. So as we get closer to the election, that's the big question. And if Trump wins, again, based on, we already know the White House agenda. We already know who's in the White House. We already know the policies they push. We already know Trump. So anybody new is uncertainty, and anyone more radical creates more uncertainty, and all of that's really bad for the stock market. So most likely, here's my thought if you care. Trump is impeached. Cool. And what does this mean? I think he has something like 42% approval rating. Might even be a little higher than that. And which, for a president, that's pretty good. That's pretty good approval rating. Especially if you're impeached. I think if the Democrats had a strong candidate, the whole world would say, okay, we're going to move from the Republicans to the Democrats, and we're going to take this new person. But I think what the world is saying is the choices are just not good enough. Because I know people that switched they've been Democrats their whole life, and because of Hillary, switched and became Republicans. No joke. So my thought process is, what will they switch back for? Biden? Warren? No. So I have a feeling like whatever your political affiliation is, I'm Canadian, so I don't give a damn, right? So it comes down to this. If you have an impeached president and a split nation, and the president's approval rating hasn't tanked, that means nobody's going to change. Nobody's going to change parties. So Democrats are going to vote for Democrats, especially since they hate Trump. Hate with a passion. But they don't have enough power to get it done. Okay? Now, if there was someone better than Biden, better than Warren, better than, if there was a strong Democratic leader that had an agenda, I think the Democrats would have a shot, because a lot of people hate Trump, but they don't have enough. So for example, one of the things I studied at Harvard was when political candidates, like the platform of winning political candidates on both sides, it always comes down to how they're going to change the world, change America, change your life. This is what they focus on. Trump said, let's make America great again. Obama said the right kinds of change, right? Like when Obama won, he was going to change everything. And that's what people voted for. Losing candidates were always self-serving. So like Hillary said, she ran on things like, I'm with her. Well, that's self-serving. That's like, well, okay, that's good if you want to vote purely for a female president, but like, how are you going to change the world? Like, it was like, I'm with her, like, vote for Hillary because Hillary's awesome. Well, that's not a platform that wins, right? And so like Biden's running on this platform of, I can beat Trump. Well, again, that's self-serving. Like, well, we want an agenda. How are you going to change the world, right? So again, I'm not being political because this worked for Trump. It worked for Obama. But if you go all the way back, like I think I studied 20, I think it was, I think at least back down to, I think it was farther back than Nixon. But anyways, if you have to run on a platform where you change people's lives. And right now, even like when you look at Biden, he's like, I can beat Trump. That's not a political platform. So it might be good. It might be good for debates and all that kind of stuff. And he'll say, Trump, you're bad. You're a liar. You're a thief. You're all these things. People are like, yeah, that's probably true. I'm voting for Trump. Why? I don't know. Everyone in my neighborhood, anyways, is richer than they were 4 years ago, insignificantly. Right? Pure mathematics is universal income by, it's not pure genius. I've taken an entire class, pure mathematics, on universal basic income. So it's not genius. It's been around for a long, long time. And it was interesting because the professor that led that class, it was actually a debate. It was half class, half debate, which was really interesting. And she worked at the New York Fed. So anyways, there's my thoughts. And Daniel says, nice outlook. To me, again, I'm not one or the other. It's just, I'm looking at it from, like, for us, it's a political economic process. I'm trying to teach you, like, how to think beyond what you see on TV, how to think beyond, Fox or CNN. I'm trying to have you look at this objectively, like, how does this affect my portfolio? How do I make money? And where are my risks? How will I lose money? Right? These are the bigger questions for us as fund managers and portfolio managers, right? So again, if it looks, as we go along, if it looks like Trump is not getting crushed, and be cautious. Remember how certain the media was about Hillary. Okay? So if you're in this little world where you just hate Trump so much, and so you sit in your Trump hate world, you might miss reality. Or, you know what I mean? So you got to be very, very careful. Step out of what you want, step out of what you think, and just look at this like, how's this going to affect my portfolio? Big change in the White House creates big uncertainty. That is bad for the market. Okay? If it looks like Trump isn't going to be destroyed, in fact, look. If it just looks like Trump has a good chance of winning, the stock market's going to go up until we know he's won or lost. If he's lost, get out of your portfolio, at least on the short term. Right? And then we'll figure things out. If Trump comes back in, again, even if you hate Trump's guts, from an economic point of view, as a trading point of view, as a trader, as a money manager, you're going to say, okay, Trump won, you might hate his guts, liar, thief, all that kind of stuff. Great, stock market's still going to go up. And then you can make all your money in the stock market and then donate it to political candidates who you think could beat the Republicans. Whatever, do whatever you want with your money, but let's make money. Okay, and so that's where I'm trying to get, right? PJ says, candidate can't win on what they're not. But yes, but isn't it interesting? Like, Hillary's not an idiot, and all the people around her are not idiots. And then if Biden or whoever, they're not idiots either, right? But isn't it interesting that if you look at it, and I studied it, candidates that run on this, what we're not campaign, we're not this, we're not that, they don't win. Edward says, I feel like he has a good chance. I think he's going to win. I think the United States is polarized. Republicans are going to vote Republican. Democrats are going to vote Democrat. And right now, there's more Republicans than Democrats. That's it. That's what. And despite it, I think a lot of people don't like Trump, even Republicans. They're going to still vote Republican. It doesn't matter. So I'll give you another example, and then we'll move on. I know someone who has run in Georgia as a Democrat. Georgians are Republicans. Not as much as you'd think, though. It used to, like 30 years ago, it was 100% Republican. Now it's like 55-45. It's fairly close. But here's the interesting thing. So this person I know, I wouldn't call her a friend, but I've known her for years. She ran as a Democrat, and she campaigned and campaigned and campaigned, door-to-door stuff, right? You know what percentage of votes she got? The exact percentage of Democrats. She could have just run as a Democrat, not knocked on any doors whatsoever, just put her name on the ballot. Democrats would have voted for her. But she went door to door to door to door to door to door, you know, months and months and months, years really, campaigning. Did everything you possibly could. And at the end, I was talking with her, and she's like, it didn't mean a damn thing. Like it didn't matter. And she lost, just like that. But she got the Democratic vote. So it's sort of like Democrats are going to get the Democratic vote. But I do know from the last campaign, I know several people that have been Democrats their whole life, switched over to Republicans, and they're not switching back for Biden, and they're not switching back for Warren. That's my point of view. I could be totally wrong. My little world, little world or pocket of paradise is probably different from, you know, all other places, but there's my 2 cents. So if you're in some other country, now you got my 2 cents of what I see and what I hear. Anyways, cool. So from that, we'll try to make some money. Let's move on. Kitty cat, again, following oil. These are bearish marks. No good if you're a bear. If you're a bull, we'll take a look at from a bullish point of view. Okay, found some stabilization. See how they congregate here? Support, right? 3 days of support. Bottom, 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 up. So what are you going to do the next time you see something like that? Oh, Barry says, do I cook a lot? Yes. Why was that compelling? I thought you asked me that before anyways. Yeah, I cook a lot. You know what I got for Christmas? A sous vide. Yes, I'm a cooker. Get. All right. Cool. How about you, Barry? Do you cook a lot? Boom. Is that right, Mr. Highvolt? That's interesting. I've heard a lot of people have done that. Yeah, the thing with sous vides, the devices are very expensive. Interesting. Daniel says, in your book, you say that your stop loss is only for emergencies and you either exit on, well, yes. If you're a new trader. No, I see. Yeah, no, I try to have balance. I'm not saying I'm a balanced person, Barry, but I do try. You know, so I do cook, and people say I cook well, so that's good. But to me, it's an art like anything else, so. Well, yeah, that's cool, Mr. Highvolt. So I need to look at, so I plan on cooking a lot of beef. I think that's where a lot of people start. So I have to figure out the searing process. Like, for example, Mr. Highvolt, do you sear before you sous vide or do you sear after you sous vide? And then if you sear after, do you cool the beef? Cool. Anyways, let's move in here. So oil's up, which is good. That's going my way. And I should preface all this. Sometimes I forget if you know or not. I'm looking for tops, right? Right? I'm looking for some big profit taking. So imagine next week it did this. Is that reasonable? Well, if we're moving sideways, sure. So I look at this as a range. But next week's projected high is here, if you're a bear, of course. And the low here is 53, but the range is down to 52. It's pretty reasonable. Cooked chicken with butter rice? Yeah, well, I'd like to do maybe Indian food that way. Steak in a bag for 2 hours, 55. Ooh, wow. Oh, yeah, Celsius, yeah. And then smoking hot grill. Yeah, so you do it after. Do you, Mr. High Volt, cool the meat first? Because, for example, if the internal temperature of your filet mignon is exactly 55 C, and then you drop it 2 minutes per side on a smoking hot pan, you've just raised the internal temperature probably to 60, and that might be overdone for you. So if you let it cool and then you sear it and bring it back up, right? Let's say you cool it to 35 or 40 and then bring it back up through the searing process. I don't know. All right. Anyways, we'll work on that. All right. So gold. Okay. It's just kind of doing our thing. Here we have it trapped. If you recall, we have it trapped. I can move this trap up a little bit to this wick. And I'm looking at this wick here. So you can see we're in a range, and then I'm looking at these wicks. So again, right now we're on next week's M3. Yeah, okay, so like the Mr. High Volt says, don't cool, he doesn't cool the meat, only 30 seconds per side. So a lot of people would say the downside to that process is, yes, you brown it, but you don't char it. You see what I mean? And it comes out okay, but so I'm thinking, and of course, I don't know, I'll experiment, but I think what I'll do is I'll bust out the egg instead of the barbecue, and I'll cook it over charcoal and burn the snot out of each side, making sure you got black all over it. And then drop it in the water for a couple hours and bring the internal temperature to medium rare. But just have it like, take it from black and blue to medium rare. Cool. That's my thought. All right, switching over here. Dollar weakness, okay, which is great. So you know my long-term point of view is dollar weakness. My short-term point of view is somewhere around here, we're going to have some profit taking. Why there? Well, the bottom of December is here, and the projected high, so let's do this in blue. This is the low for December. The projected high is here, so we've already kind of done it. And then I'm looking at next month's sell zone, which I'll do in this kind of purplish color. And it looks black, but that's purplish. And I'd like to combine all of this, like my BS guess. Remember, it's just BS. It's not best. It's just BS. My BS guess is that we'll start January like this. Okay? And this top would be perfect for that. This top would be perfect for that. This top would be perfect for that. And then, of course, what we're doing is playing 3 ranges here. So you would get an up, a down, an up, a down, an up, a down. And then I'm not expecting, as I have mentioned earlier, a stock market crash. But there might be a fast move down, and then we buy it all back. And we end up maybe, let's say all of January is basically down. But by all of January, that's the bearish move for January. But what if we do it in 2 weeks and not 4 weeks or even 5 weeks, I think, in January? So in 2 weeks straight down, we hit our target and then we buy everything back up and drive it up. Okay? Thanks, Javier. Sear for 20 seconds maximum flavor. Yeah, I'll try it, guys. I'll try everything. Thank you, you sous vide experts. How many people are Googling sous vide right now? Like, damn it, all these people know about sous vide, and I don't know what sous vide is. I have actually a pretty funny story how I got the gift. I'm standing in a Williams-Sonoma about 2 months ago. And I'm looking at this and I'm like, what the hell is this? And it's a sous vide. And like, what the hell is a sous vide? I'm like, oh, it's for precise temperatures and stuff. I'm like, wow, that's awesome. Right? And then like 2 days later, I'm at a friend's party and he just redid his kitchen, put giant money into it, put in all these like fancy bread baking stuff in his house. It was really cool. But some of the cabinets are not quite done, and one of the high cabinets didn't have a door on it, and there's a box in there. I'm like, there's that thing I saw at Williams-Sonoma, that temperature thing. And I'm like, do you ever use it? And he's like, no, I don't use it, but we have one. I'm like, oh, that's cool, right? So then I do some YouTubing, and there's a couple of people that have sous vide channels. I'm like, wow, this is really interesting stuff, right? Well, so now I'm into it. And here's the interesting thing. A week before I saw it at Williams-Sonoma, my mother-in-law bought me one. I think it's Sousvide. French for like in vacuum. Something like that. Sous vide. I think it's this. Susvide. I think that's it. So anyway, so she had bought it for me, and I'd never heard of one of these things, but she knows I do like the cookberry. And then I see one in the store. I have no idea if someone's bought one for me. I see one in the store, and I'm like, oh my God, it's so awesome. Look at this thing. My wife's like, she already knew. She's like, don't buy it, don't buy it, don't buy it, don't buy it, don't buy it. And then I see my friends got one. I'm like, oh my God. So anyways, it turned out to be a really good guess. So it was good. I'm like, oh, what a cool gift, especially with that story behind it. All right, so let's look at Swissies. Greg Anders says, I just don't see the yen's getting stronger. Yeah, you wouldn't see it, Greg. So let's actually go back to that. Let's talk about this for a second. I want to be clear. I'm not making a prediction. I'm not, okay, and to take this even further, you can look at these charts all day long, and as you probably have noticed if you've done this, there is nothing that says down, right, Greg? Nothing. And I'll admit this year is different from many other years. With the Fed having jacked up interest rates. Then they said they're going to jack them up for the unforeseeable future, well, forever. And then all of a sudden they cut. And now we're on hold. So there's nothing fundamentally that says down. And I'm not saying fundamentally down. I'm not saying technically down. Okay, Gregors? So we got to get all of this out. All I did was, in the beginning of December, take profit because that's what I do. Okay? And I told you months ago why and all this. So all I did was I saw a little bit of threat to my profit that I sat on for months. And so I culled the herd. Okay? I didn't kill, right? I just culled the herd. And I'm open-minded to rebuilding. Why? I don't know, because I do it every year. So it's like one of those things. Okay? It's just one of those things. I can't predict the future. But I know when to plant my seeds. I know when to harvest my crop. Sometimes I'm a little early, sometimes a little late, but I know how to farm. So right now I'm just watching the weather. I've already harvested. What my neighbor does is irrelevant to me because I've already done it, okay? But if it's not technical and it's not fundamental, then there's just some human factor for the up moves and the down moves, right? Can we at least agree, let's say, that there's a human factor to the markets? Well, really, the markets are humans buying and selling, right? So I'm saying there's another behavioral finance application that I'm applying here. It's not technical analysis. It's not fundamental analysis. It's behavioral finance. And that's the study of irrationality or predictability based on human nature. And we know that in most countries around the world, especially in our market participants that trade Forex, right, that there's a year-end phenomenon in which most countries base their taxation calendar on, right? So in April, for example, as a private citizen in the United States, in April, you pay taxes on what you did in 2019. So what matters in 2019 in relation to year end, in relation to taxation, institutional and professional money managers have to do something called rebalancing. And there's also some taxation strategies that are part of rebalancing. And I'll give you a simple example. Apple is up 85% this year. Okay? And what if you owned a reasonable amount of Apple? But in January of 2019, in your disclosure document, in your rules of engagement as a money manager, part of your disclosure, which is part, let's say, of your risk management, you say that no position in your portfolio could have more than 5%. But you love Apple, you love tech, you like all the FANG stocks, so you're fully deployed, which means you take all the capital that you can put into Apple, you did put into Apple. You following me? Now the year goes by and Apple is up 85%, and son of a gun, your portfolio now has like 9% Apple. And you're like, well, I'm not allowed to do that. So at the end of the year, you have to rebalance so that your portfolio follows your disclosure document. So you have to sell some Apple and drop it back down to the 9%. And what you have is cash. Okay? It's not that you hate Apple. It's not that you don't think future cash flows from Apple will diminish. In fact, with 5G, you're probably thinking you're going to go through another upgrade cycle and all this kind of stuff. Makes sense. But you have to add another level to your analysis. We're not just picking stocks. We're thinking about what institutional investors are going to do. So, but I'm saying in the next 10 days, because of this calendar issue, either before the end of the year or shortly after the end of the year, institutional investors will have to rebalance. And therefore, they're going to get out of a bunch of their winners, and any stock that looks like a loser, they're going to get out of that too, because if you have, let's say, a cash loss, so let's say you lose some money on a trade you made in November and it just didn't work out, plus you made a whole bunch on your Apple, well, what you want to do is take the loss and write off the gains you made on the Apple trade. And it's all, again, based on taxation. So whether you do it in 2019 or in 2020 has to do, again, with your particular institution and the taxation strategies. And do you want to defer your taxes? Maybe you want to take some of these wash sales this year and defer some other things next year. But, you know, this is what institutional investors think about. And they have accountants and lawyers and all this kind of stuff that get involved. But we know right around the last week of December, which is this year, or this week, and the first week of January, a lot of this is going to go down. That is my dumb, stupid guess. You understand? This is simply one strategy that I have here. So now my job, just like anything else, is you start with strategy, right? Remember my book, Strategic and Tactical Forex Trading. That's just a strategy. So my strategy in 2019 was somewhere between basically December 1st and December 12th, take profit. And I did. Thank you very much. Great. Now, my new strategy is 2020 might open with rebalancing move down, And in that case, yens would get strong, Swissy would get strong, so on and so forth, and I'll make some money on the way down. Okay? And it's important to me because I have a lot of exposure to the stock market. I have a significant chunk of change in the stock market. Okay? But this is just a short-term strategy. This might just be 3 weeks in January. And if I'm right when it comes down, I'll most likely be buying the stock market back. Why? Well, for the reasons, like if I was talking with myself as I'm the client and I'm also the manager, I would say, well, macroeconomics seem to be improving. Okay? Political stability in the United States seems to be improving. Why do I say that? I think Trump's going to win. That's it. Who cares if I like Trump? I don't care about that. But I don't think the Democrats have it. And the thing that really convinced me was him having an approval rating in the high 40s, right? He's as loved as Obama, just on the other side. Okay? So global macroeconomics seem good. Politics seem good. And then in the United States, I'll call it micro. It's not really micro, but my form of micro, just focusing on the economy in the United States, and in particular the Fed, we have full employment, no signs of that changing, right? We have low inflation, and the Fed is pumping free money into the market, or at least keeping money cheap. So we'll say money cheap. Okay? So when I look at cheap money in the United States, political stability in the United States, and improving macro scenario, I might be wrong, but that's my opinion. And if my opinion means I still want to be a buyer of the stock market. I still want to take some risk, but in January, maybe risk off. And then by June, and certainly by September, well, again, the election is the thing that makes it complicated, but I will sell the hell out of it and then buy it all back cheap. Thank you, Scotty. Yes, if you did like my, I'm spilling my guts here, right? If you appreciate that I took time away from my family this morning, please click the like button if you've enjoyed our time today. Okay? Now, going back to what Greg said, right, is I don't see the ends coming down. Yes, you will not see it until it happens. Okay? Or it just drifts and keeps doing what it does, and that's cool. Let's say I'll be looking the wrong way for 3 weeks. But think of it this way. At the end of 2020 and 52 weeks goes by, and for 3 weeks of those I'm looking the wrong way, I either have small losses or no trades. Will you even notice? No. You won't even notice. PJ says, I expect January to be more profit-taking than December because there's really no losers. Yeah, well, that's some good analysis. Okay? So, for example, if you join my swing trading group, swing.fxbootcamp.com, yeah, I expect that first swing trading meeting to be epic. It could be huge. It could be huge as a swing trader. We might set something up like, oh, look, we're at a monthly M3, and then we'll meet a week later, and we'll have like 300, 400, 500 pips per trade. Okay, the same way we set up September. By the third week of September, most people in the swing group were up like 500 to 1,000 pips per trade, and it was like, yeah. And then we talked about, okay, well, very often you have a very significant pullback. I wouldn't be shocked if it came back 100%. And guess what happened? Came back 100%. And then now we're at the double bottom, like, good. We were the first ones in because we're the smart money, but now the rest of the market's figured it out. Now they're going to buy here, and now it's going to go up till at least Thanksgiving. Bought all that back, and guess what happened? All the ends went back up all the way to Thanksgiving, and here we are in the last week of December. They're still going up. You're welcome. Okay, so January, that first week, that first swing trade. Oh my God, the first swing trade. I'm looking at the calendar. It's not coming up, but that first swing, yeah, the 2nd of January. That is going to be a huge day. So if you want to be a part of the swing trading group, I would recommend you start now, join now, and make sure you go through all the swing trading lessons. There's 4 hours. No, is it 4 hours? Yeah, I think there's 4 hours of videos, but then you can go through the last, 30 weeks of swing trading videos and watch every single one of them get sharp, ready for that. Okay? Because I'll tell you, last year and I think the year before, a week went by and if you weren't on it, you missed it. So if you're like, you're not ready. So consider that. Happy New Year. Okay? And again, if you think that was a self-promotion thing, then do this. First of all, you're not allowing me to help you. If that's immediately you're like, oh, this guy's a self-promoter. You're not listening to me. You're listening to your internal negative psyche. Then do this. Go back and look at every other January for the last 2 or 3 or 4 years and ask yourself, do you see anything like what I'm talking about? And if you do, then turn off the negativity, right? Check that at the door, sign up, and get ready. All right. So yens are all up. Beautiful, 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 beautiful. What a gorgeous day. What a gorgeous day. Let's change all of these and let's see where we are relative to where we want to be next month. Okay, you see that logic? I'm not interested in today. I'm not even interested in December. We're hitting most of our targets for December, so why would I care about December? I'm all about January. Okay? Jack says smart money lets the smart money lets the moves happen first. I agree with that. What I'm doing, Jack, is I'm saying I'm looking for my lines in the sand. At what price would bears enter the market? And then, Jack, because remember, it's strategic and tactical Forex trading. So you start with a hypothesis, and then you use technical analysis to confirm or deny. So if I see a lower low, lower high in a scenario where I think the market's going to roll over near this price, then yes, I'm going to get short here, Jack. I'm not going to guess. I'm not going to throw down a trade first, right? I have to be smart, as you said. You got that, Jack? That's a fact, Jack. So let's bust out to a higher time frame. I will tell you that I would like to be short CAD yen around 83.70. Well, we're at 83.70 now. So Jack, if I see, let's say, let's clear this out. Let's say I see a big bearish engulfing candle. Then I'm going to want up and then down. So this might be my sell price at 83.70, but I might actually get short at a retest of 83.50. So I need it to go from basically 83.70 down to maybe 83, up to 83.50, and then I will drop it like it's hot. Okay? He says, I thought you were short CAD yen. I probably was, although I'm bullish on oil, so CAD was probably the last one, but yeah, I probably got knocked out. That's why they invented stop losses, right? Javier says, do you recommend all the courses? Well, the swing trading course is in the full course, so you're going to need to know everything eventually, right? So, but do you have to have it first? No, but you should do it. one way or the other, right? So anyways, Jack, that's what I'm thinking. I'm not going to be the first mover, right? I don't believe in first mover advantage. And I discussed this at school a lot. I believe being a first mover is a disadvantage. Cool. So like euro yen, where would my price be? I'm looking at this around 122.50. I'd like to get short this. So if it does up, okay, and then it starts doing this, yeah, I'll probably get short around a retest of 122, which means down from 122.50, down to basically 121.50, back up to 122, drop it like it's hot. You got it? But Jack, does that make sense? I want to make sure I don't sound like I'm betting it's going to happen. I don't do that. That's not what I do. Okay? It's more of an if-then statement. If this holds up here, then I look for reversal patterns to confirm, right? So for example, this is what, a 4 hour. What if up here on a 15-minute chart, I start seeing price action like this? Then I have a permission in this area to sell here or sell here on a 15-minute chart, put my stops up here, and if it does this, come on, let's try to get this to be black. There we go. If it does this, then I take small losses or break even if it does that. But I don't think it will based on my strategy. But my strategy absolutely 100% can be wrong. And I'm not willing to lose a lot of money out of pride for getting that right. Yeah, the only thing with that, Reb, is that many people's trading is completely reactive. You see what I mean? You don't want that. So I'm being proactive in my planning, if you want to look at it that way, and then reactive in trading it after confirmation. Well, Jack, I've already been doing all of that, right? So all of that's done, Jack. So if I'm right, we'll have 3 weeks down, and then I will buy everything back up. Okay? So I will be, and I have been, but I'm looking at just a 3-week window here, okay? Oh, good. Awesome, Reb. It's sort of like this, I guess. Another way of saying it, Jack, is I am looking for long positions, but I buy low. So I need it to come down again before I buy it, okay? Depends on the situation, Reb, right? And then taking a look at Aussie. Okay, same thing. If it were going to fall, this is the best price right now if it is. But this looks very bullish, right? So this probably wouldn't be the first one I sold. But if I did see a dramatic move on all the yens, then I could like say, okay, if I get a double top, I'll take a shot here, put my stop here, so I'm not risking much. And then if I get a new lower low, then I'm going to look for a new lower high, lower low. Okay? Okay. Well, the US dollar being weak makes sense. I mean, I've explained it 100 times recently. Let's do it one more time. The Fed lowers interest rates. The dollar goes up. I know this is not what you're taught. I know you don't hear this on the news. I'm right. Everybody else is wrong. Okay? Then the Fed stops cutting interest rates. US dollar goes down. I know you've heard this from me 100 times. So, right after the December meeting, December 11th meeting, I told you, you need to determine whether they told us they're done cutting. And if you believe they're done cutting, because they don't just say we're done cutting. If you believe they're done cutting, US dollar will weaken. Okay? On the long run. Now, there might be some profit taking in January and the dollar will strengthen, but that's not long run, that's short run. On the long run, let's say for the rest of 2020, as long as the Fed doesn't cut interest rates, the dollar will be weak, generally speaking. It'll have its ebbs and flows, and that's where technical analysis comes in. Okay? So if that's your interpretation that they're done cutting, dollar will weaken. Okay? Can anybody here confirm that I've shared this knowledge? That you know this? Cool. Yeah. And the interesting thing is, it's not well understood. Nobody's taught me. I just see it from sitting at my desk for 20 years trading Forex. That's what taught me. The market taught me. Okay. Cool. So thank you for being here during the holidays. I know the markets are quiet and stuff, but this is nice. These are nice moves. Okay? You should always be ready for things to change. Never be certain that this is up and up and up and up. I think it should go up, but don't be shocked. Like here we are at 76. I see no reason for it to come back, that it can't come back to 73. The thing is, at 73, am I a buyer or a seller? Well, a lot of people, if I'm right here, a lot of people won't see this happen, right? It'll just happen. And we'll be down here really quickly. And people that entered these trades late will get sliced and diced. And then, because they're late here, they're going to start selling down here. But that's probably where I'd be a buyer. That's true, right? Marina says she always trades over the holidays, but it's what's interesting, right? Is that so many people say you can't do it. You can't trade over the summer. You can't trade the Asian session. You can't trade holidays. And I'm like, really? Maybe you can't trade, but I'm like, there's good money in these periods that people complain. But those are probably people that can't trade. So I agree with Marina. Market is good. Always trade over the festive. Yeah, absolutely. Cool. Look at these nice moves, huh? M2 up, M2 up, M2 up, M2 up. Isn't this nice? Right? Buy zone, buy zone, buy zone, buy zone. Gorgeous. Okay. So maybe it just does this. Who knows? I don't know. But I'll be there and ready. Oh, that was good, guys. So this morning I'm sitting outside. The sun's coming up over the lake. got a nice cup of coffee. It's cool, but it's warm at the same time, you know, the winter kind of stuff. And then finally my alarm goes off. Oh, don't forget about the webinar. I'm like, oh, cool. So I stand up, and of course, I've been sitting on a wet cushion for an hour, and now my pants are all wet. So I'm getting all itchy. How much time per week is needed for swing trading course? Well, the course is 4 hours, and we spend, what, 90 minutes a week as a group. But once you learn how to swing trade, half an hour a week, half an hour a month. And of course, I like day trading. It's just swing trading on a daily basis. So I swing trade daily, swing trade weekly, swing trade monthly, all the same way. So, 15 minutes a day for day trading. Okay. The wonderful thing about the swing trading methodology is if you have a day job and stuff, you have to know how to swing trade. That's just that. Because we're planning things days in advance. We're looking at trades from 100 pips to 300 pips typically. If you get some seasonality behind you, then we're holding the trades longer. So like I said, in September, I prepared everybody, and there were 1,000 pip moves that people made, right? People made thousands of pips in September in the swing trading group. So does it take a lot of time? No, but you need to know how to do it, right? And you need to be good at what you do. And really, a lot of the swing trading group, I think for the swing traders, is having the regiment of meeting every single week. It's sort of like hiring a coach at the gym. Look, you can go to the gym whenever you want. You can work out and do whatever you want. But lots of people really need a coach. Like they're like, man, I don't want to go to the gym today, but I've paid this guy $200 to be my my gym buddy. So I gotta go because I paid him all this money. So you go to the gym instead of flaking out. But that's the value. That's 90% of the value, I think, of hiring whatever you call these guys that you hire at the gym, just to make sure you go to the gym. But yeah, if you got a job, I think everybody needs to swing trade. But if you're starting somewhere and you're like, you can't day trade. Like you log in, you got an hour a day, and you're like, I have to trade New York Open. I have to trade the New York Open. I have to trade the New York Open. You're not going to be successful. So you need to start with technical analysis, fundamental analysis, remove luck from that, having a longer term point of view. So now you're looking for the trade of the day, the trade of the week, the trade of the month, and the exact moment you're at the charts is not necessary. All right? It doesn't come down to the 60 minutes that you're there, you're going to make money and go. Look, the odds that you get market conditions perfect in those 60 minutes and to get a good trade set up and take it is very, very minimal. Okay? And what does Reb say? Reb, you got blocked. I think you. I'll show what Reb said. Anyways. Did it block? Deleted it. Oops, I didn't mean to delete it if it did. But anyways. So that's that. Reb says, try to go for monthlies, couldn't hold it. Yeah, you got to get better at that. But what's the secret, guys? Having small losses, letting your winners run. And that's all that swing trading is. You risk 50 to pick up 300. That's all it is. But you have to know when and how and why, but it's not time consuming. You start there, then I think you should drill down and learn how to intraday trade. Because I love day trading, intraday trading, scalping, all of this. I love it. And it's really necessary to have, the complete package, so to speak, as being a trader. But I would recommend everyone should start with swing trading. Because if you can't enter that, you can't enter something intense like an intraday trade, forget it. Right? And Marina, and you specialize too, right? So, yeah. Being a specialist in a currency and knowing how to swing trade using technical analysis, I mean, yeah, there you go. That's 90% of everything. But then you can drill down and intraday trade and scalp and all these other interesting things. And, you know, I have seasonality trades, and then I have flow trades and these other trades and all that kind of stuff. Those are all more finesse, next level stuff. But anyways, so if you're going to join now, swing.fxbootcamp.com, or just go to fxbootcamp.com and take the whole dang thing. Cool. So let's call it a day. Have a wonderful weekend. Happy New Year. Be safe. Be very, very safe. 2020 is going to be an amazing blockbuster year for you, where you break free of mediocrity, the chains of mediocrity. You're going to think better. You're going to be better. This is going to be good. So anyways, peace on earth. May the pips be with you. May our profits be above average. Have a wonderful weekend. Have a happy new year. And I will see you on the 2nd of January for our daily webinar. And then at 11 a.m., the very first swing trading group of 2020. And like I said, and I am not joking, extremely significant day. Extremely significant day for all traders, but especially swing traders. Because I would not be shocked if we get on those trades and we hit our monthly targets in the first week or two. It'll be like January 15th and we're done for the month, and probably counter trend trading at that point. So be there if you can. Cool. Take care. Oh, hey, and don't forget to like and subscribe, huh? Leave a comment. Leave a comment in today's video. Please leave a comment, all right? Leave a comment.